The stock market continues to drop. Why is this happening? And most importantly, what does this mean for your portfolio for the remainder of 2018? Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown. It's Thursday, October 25th, and this is CB3 on 3. As you know, CB3 on 3 examines the 3 comprehensive influences on market behavior: political, fundamental, and technical. Right now, political and fundamental influences are the midterm elections approaching and the third quarter GDP being announced tomorrow morning. But those are not nearly as important as the technical influences, at least in this market environment. 2 weeks ago, I talked to you about the beginnings of a market correction. Here's what's continuing to happen. The market is indeed pulling back from being overbought. You can see on this chart the movement in the S&P 500 over the past 3 weeks. Overbought means there's an imbalance of buyers versus sellers. When the price bars go down, that means there are more sellers than buyers. So, when might this selling end? Well, look again at the chart. In the short term, I'm watching the low price on October 11th and yesterday, October 24th, which I've highlighted here on this chart. Today's market activity has traded above yesterday's low and indeed has traded above Tuesday's low as well, and that's super important. Now hang with me, folks. I know some of you are not that interested in the technical aspects of the market, but this is one of those times when the technicals reign supreme. Here on the chart, look back with me at the April and then February lows of this year, both of which I've highlighted. Those are I repeat, very key support levels. Support levels are those where I expect buyers to re-enter and support those price levels hit in April and February. If the market were to fall below the February low, that to me would mean that we could be on our way to a bear market. Now look at this next chart. The S&P has indeed traded below a key technical indicator known as the 200-day moving average, shown by the red arrow. Now that doesn't mean the market's going to crash. It just means that it's now weaker than at any time since last April. That said, here's one more look at the long-term view of the S&P. Now this is a monthly chart, so every bar here represents one full month, going all the way back to the beginning of the bull market in 2009. See that big red ugly bar that I've highlighted? That's this month of October. And if October finishes much lower than where the S&P is trading now, that would be very bearish. It would be bearish because on a monthly bar, that's the ugliest or the reddest bar since March 2009. Folks, that still doesn't mean we're going to have a bear market. Market action plays itself out on an hour-to-hour basis. Pullbacks are a normal, healthy part of stock market activity. We've had them for more than 100 years. And folks, corporate profits remain strong. I mean, really strong. Our CB3 consensus expects a 21% increase in S&P 500 earnings per share in the third quarter 18, supported by strong U.S. economic growth and tax cuts. Finally, the U.S. economy itself is in excellent shape. Consumer spending is growing solidly. Consumer and business confidence is high, and the job market is quite strong. Manufacturing surveys are near record levels, and by historical standards, interest rates are still fairly low. What's the bottom line? We've been here before, and we'll be here again. There is no reason to panic as an investor. We continue to monitor the market hour by hour, so you don't need to do so. America has never had a brighter future than it does today, and the economic data that I study vigorously supports exactly that. And that's CB3 on 3 for Thursday, October 25th. Check out our videos and webinars at cb3financialgroup.com. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.